Jan Hatzius at Goldman says, yep, I've taken down my GDP forecast. Okay, we get it. We know the reasons why. B of A moving up their taper timeline. Where are we? Are we sort of building too many red flags, or what's the story?
I think there are red flags. And look, I was on the show exactly 1 month ago today, and I couldn't quite get on that bull parade for tech, and I couldn't quite get on the bull parade for everything, because this Delta variant, what I said then was that we don't have a new solution coming, so we have to let it play out. And here we are, letting it play out. At that point, I said, I think a 5% correction would be meaningful. Wouldn't be meaningful, and it would be something that was more likely. Now I'm getting a little bit more pessimistic. Maybe it's closer to a 10% correction. And there's a couple things weighing on that. Number one, we continue to talk about August as a seasonally light period. That's true. But you have to remember September and October are seasonally volatile periods. So we're going from a seasonally light period into a seasonally volatile period. Not to mention, continue to have concerns over immunity waning off. We're going to have information from the Fed. We're going to have a new dot plot in September. I think that could maybe spook markets that a rate hike is coming. And we've got a debate over infrastructure and the budget coming. So I think the next probably 45 days are going to be tough. But as an investor, you're not trying to avoid corrections. You're trying to avoid bear markets. I don't think we're headed for a big bear market.
All right. So, Steve Weiss, of the red flags that we think we have, right? People talk about the ARK funds and the pullback that we've seen over the last week. Innovation's down 5%, fintech's down 4%, next-gen internet's down 4.5%, genomic revolution is down 5%. So that's one of the red flags that people point to. Kathy Wood, who was just on Tech Check, I hope everybody saw the interview, said not so fast. Here's where she thinks we are. Let's listen. We'll kick it around on the other side.
When I see such negative sentiment out there, especially when it comes to valuation and longer time horizons, investment time horizons, I actually feel a little more comfortable. I like bad news and maybe news that's not the discounting is worse now than the news actually will be. I actually feel better in that kind of environment for our strategies. I don't think we're in a bubble.
Steve Weiss, you see a lot of IPOs and SPACs falling to earth. She said we couldn't be further from a bubble. She didn't seem too concerned about where the market is. So are we, as we asked at the very top, are we overblowing these risks?
Well, Kathy's great. I've got a lot of respect for her. She just says something that, different than what I do. I don't think we're in a bubble. I really don't think that's the issue. I think that there are red flags there. I think Liz is right about the seasonality of it. But what we're not talking about at all is we're not talking about the partial closure of the third largest port in China. I was on the phone today with some companies, in particular GXO, which has just a phenomenal insight because of their vast logistics network into what's going on. And, I was corrected on one point, which is that I thought there was an easing of the supply channel. And there hasn't been. If anything, this has exacerbated the slowdown in it. And you're seeing it in Malaysia. If you talk to other companies, you're seeing it in Vietnam, and the market's not appropriately focused on that. So when you look at commodity prices, which have come down, they've rolled over virtually every single one, you tend to think, well, inflation's under control. But it's not really. That's driven by speculators, and you could tie that to the slowdown in China. But China will be back. They'll stimulate. So you'll get commodity prices coming back up, which is why I really haven't sold any.
But answer my question, though. Answer my question. Are the risks mounting or are they overblown? Right?
Yes.
That's what I want to know.
The risks are mounting.
They're mounting.
The risks are mounting. Look, we have J&J was the least popular vaccine. But for those that had the dose of J&J, they weren't even mentioned in a booster. So you've got to get re-inoculated with either Pfizer or Moderna. So you have that segment of Delta. We're seeing a big fall off in the efficacy of the Pfizer vaccine down to 55%, according to the data that's coming out of Israel, which is ahead of us in the vaccine program. Moderna, it's come down to about 75% with Delta. So the question is that everybody should be asking, what's the appetite for getting that booster shot? What's the appetite for people that haven't been vaccinated to get vaccinated? Now they know they'll need a booster shot at some point in time. So I think you have these concerns. Having said that, though, I think that creates, I believe that creates the opportunity for tech, reasonably valued tech, which is what we're seeing now. So that's where I'd be putting some money in, supply chain worries aside. So look, I continue to be bearish on the market near term, not looking for a major decline, not major sell-off, but I think you got to be very measured to where you put money. And the time for the easy money, to your point in SPACs, is gone. You're going to lose dough if you're in low-quality names.